Good afternoon, everyone. This is Daniel from Price Action Currency Trading. That is actually the name of our group on Facebook. Feel free to join Facebook and look for our group there. We'll also be posting this video on YouTube. Today I wanted to go over something called anchoring. It's actually an interesting technique that I got from a book called Reading Price Charts Bar by Bar by Al Brooks. It's a really tough read, so I don't recommend that for new traders. But it's a must-have book for those who trade price action. So it's a book more for the more experienced trader, because it's a real technical book, and new traders will probably more than likely get lost on it. But it's definitely a book worth picking up. Today I wanted to go over something called anchoring. It's basically how to draw a trend channel that doesn't have, let's say, a second or third bounce for those who use the Elliott wave theory. Right now we're looking at the Euro USD. This is the daily chart. As you can see here, I got my 55 EMA here in blue and 200 EMA here in yellow. I still feel that the pair is bearish, even though you see a little spike up. But besides that, let me show you what anchoring is. Basically here, what anchoring is you're drawing the trend channel line. Let's say, for instance, so you're lining these up. So let's just assume that and also you can draw these trend channel lines from the candle or the wick. It's really up to you. People do it differently, but it really doesn't matter. For me, I kind of like draw them from the channel. From the candle. So I will go ahead and draw the first line. Now let's assume that we have just one bounce off the top channel, okay, and this is not here yet. This doesn't exist, so you don't have a secondary bounce. You don't have a bounce to the bottom. So let's just say that you only have from here to here, and let's say you're up to this little green candle here, and you don't have, this doesn't exist. So let's just imagine we're only up to, let's say, 1.4080. At that point, it's kind of difficult just by looking at it where things are going to bounce from. But if you have your initial trend line based on just these two hits, what anchoring is you're taking this trend channel that you already drew, okay, it's already done, and you're moving this, you're anchoring this to the bottom, just like so. Now, obviously, we said that let's assume that this doesn't exist, but as you can already see, by anchoring the top to the bottom, you see that it bounced off of here, and let me go ahead and redraw the top trend line, and what you would have is a complete parallel line. They're completely parallel, okay. So what you have here is your trend channel. So obviously your channel, your trend is bearish. So when you anchor this, and we were assuming that we didn't have, these candles here and this other bounce, just based off of these two tops, you drew your trend channel line, and then you anchor it to the bottom. And as you can see, it bounced off of the bottom, and the assumption is that it was going to bounce off of this, which it really did. So it bounced off of these trend channels. Obviously, it was trading. It was a little bit choppy. It was trading, but it was running along this line here, the trend channel line. And this is a good way to draw a trend channel and just kind of like see the momentum, which way is trending, and figure out with these lines where you're going to have a bounce from. So, assuming this wasn't here, you'll see that it bounced off this trend channel line, shot back up. This was probably like about 350, 360 pips. It bounced off of this top line here, and we're heading down. I might assume that we might get a bounce off of here and then shoot right back down. So this is actually a good way to draw your trend channel lines, and it could be very useful for new traders and experienced traders. So I hope this is pretty helpful, and put it to use, and hope to see you in the group. Thank you.